You are standing at the edge of a financial decision. On one side, you see the hype, the explosive search trends, the promise of innovative technology and high yields, the voice of, "What if this is the next 100x coin?" A voice driven by opportunity and greed. On the other side, you feel the hesitation. You remember the stories, the multi-million-dollar hack, the brutal price chart, the inherent risk of decentralized finance. This is the voice of fear. Greed says yes, fear says no, and when these two emotions are screaming, rational decision-making becomes impossible. You are left in a state of paralysis. This video is an antidote to that paralysis. I am not going to give you an answer. I am going to give you a framework, a clear, unemotional, 5-point checklist that will guide you through the noise and help you analyze this opportunity like a professional investor. By the end of this analysis, you won't have my opinion. You will have your own well-reasoned conclusion. Let's begin the analysis. Checklist point 1. The technology. Is it genuinely innovative? The first question you must ask of any crypto project is simple. Does it solve a real problem in a way that is demonstrably better than the alternatives? The problem Platypus addresses is a real one in DeFi, the inefficiency of stablecoin swaps and the complexities of providing liquidity. The solution Platypus offers has two core components. First, single-sided liquidity. This is a significant innovation. It removes the need for users to hold two different assets to provide liquidity, drastically simplifying the process and lowering the barrier to entry. This is a clear plus on the checklist. It is a genuine improvement over the status quo. Second, the open liquidity pool. Instead of fragmented pools, Platypus uses a single vat of capital. In theory, this leads to better capital efficiency and lower slippage for traders. This is another technological advantage. So, on paper, the technology is elegant and innovative. It presents a strong argument. But we must also be critical. Is it a once-in-a-generation innovation or a clever incremental improvement? It improves on existing models, but it does not fundamentally change the game in the way that, say, Uniswap first did. So the first question on your checklist is this. On a scale of 1 to 10, how much do you believe in the long-term superiority of Platypus's core technology? Your answer to this will be the first input in your decision. Checklist point 2. The tokenomics. Is the economic model sustainable? A great technology can fail if the economic system supporting it is flawed. So the second question is, are the incentives designed for long-term value creation or a short-term pump and dump? This is an analysis of the PTP and VEPTP tokens. The bull case for the tokenomics is the VEPTP flywheel. By allowing users to stake PTP for VEPTP, the protocol incentivizes long-term holding. The longer you lock your tokens, the more voting power you get and the more your rewards are boosted. This is a significant strength. It's a system designed to discourage mercenary capital that just farms rewards and leaves. But we must also analyze the bear case. Like many DeFi protocols, the PTP token has a high rate of emissions. The protocol essentially prints PTP to reward liquidity providers. This creates constant, underlying sell pressure. For the token's value to appreciate long-term, the protocol must eventually generate enough real revenue from fees to offset these emissions and create buying pressure. The question for your checklist here is a question of belief in the business model. Do you believe the Platypus platform can attract enough trading volume and generate enough real revenue in the future to make its tokenomics sustainable? Or do you see it as a high-inflation, yield farm token destined to lose value over time? Checklist point 3. The history. Can you trust the people and the code? This is the most difficult and most important question on the checklist. A great technology and great tokenomics are worthless if the foundation is insecure. The unavoidable fact is this: Platypus suffered a catastrophic, multi-million-dollar hack in early 2023. There are two ways to interpret this fact. The bearish interpretation is simple and powerful. A hack of this magnitude demonstrates a past failure of security, auditing, and code quality. It breaks the most sacred promise in DeFi, the safety of user funds. For many investors, this is an immediate and permanent red flag. Trust was broken, and it is incredibly difficult to earn back. However, there is a contrarian bullish interpretation. The fact that the project did not collapse, the fact that the team did not disappear, the fact that they are still building and communicating demonstrates extreme resilience. A team that has gone through a near-death experience and survived is arguably more battle-hardened and security-conscious than a team that has never faced a true crisis. So the third question for your checklist is a deep one about risk and resilience. Does the history of the hack represent an unforgivable failure that signals permanent risk? Or does their survival represent a battle-tested team that is now more focused and stronger than ever before? Your personal tolerance for risk will define your answer.
We've now analyzed the first three critical points on our checklist. We've examined the technology, the tokenomics, and the troubled history of Platypus Finance. You should now have a clearer picture of the fundamental strengths and weaknesses of the protocol itself. But our analysis is not complete. We now move from the internal workings of the project to its place in the wider market, and most importantly, its potential place in your portfolio. This brings us to the final two and perhaps most practical questions on our checklist. Checklist point number 4. The valuation. Is it currently undervalued or overvalued? A fantastic asset bought at a terrible price can be a very bad investment. Conversely, a flawed asset bought at a deeply discounted price can be a very profitable one. So the fourth question is, based on the available data, is Platypus Finance cheap or expensive right now? Again, there are two opposing arguments here. The bearish view on valuation is straightforward. You look at the price chart. The PTP token is down well over 99% from its all-time high. For many, this is a clear signal of a broken asset that has permanently lost market confidence and will likely never recover. You can also look at its total value locked, or TVL, and compare it to its competitors. The argument would be that its current market capitalization is still too high relative to the amount of capital and activity it has managed to attract back post-hack. But the bullish view on valuation sees this exact same data as the opportunity. This is where the asymmetric bet argument comes into full focus. The fact that the price is down 99% means the market has priced in a near total failure. You are buying at a moment of what could be maximum pessimism. The bullish argument is that the technology and the tokenomics are still sound, and the team is still building. If, and it is a big if, Platypus can successfully reestablish trust and recapture even a fraction of its former market share in the next bull cycle, the current valuation could look incredibly, absurdly cheap in hindsight. The potential upside from these levels is exponentially greater than the remaining downside, which is capped at 0. The question for your checklist here is a question of market perspective. When you look at the current valuation, do you see the dying embers of a failed project? Or do you see a compressed spring, coiled with potential energy, waiting for a catalyst? Checklist point number 5. Portfolio allocation. Does this investment fit your personal strategy? This is the final and by far the most important question on the entire checklist, because even if we conclude that Platypus is the most innovative, perfectly valued, and resilient project in the world, it might still be a terrible investment for you. Up until now, we have been analyzing the asset. Now, we analyze the investor, you. A professional investor doesn't just buy good assets. They build a balanced portfolio designed to meet their specific goals and risk tolerance. The most common framework for this is the core satellite strategy. Imagine your portfolio is a solar system. Your core is the sun. It's the center of your financial universe. This should be 80 to 90% of your portfolio invested in safe, boring, diversified assets like global index funds. The job of the core is slow, steady, reliable growth. Your satellites are the small planets and asteroids orbiting the sun. This is a small slice, maybe only 1 to 5% of your total portfolio, where you make your high-risk, high-reward bets. This is your speculative allocation. This is money that you can and should be fully prepared to lose to zero. So, the final question is not, is Platypus a good investment? The final, most critical question you must ask yourself is this: does Platypus Finance belong in my tiny, high-risk satellite portfolio? Answering this requires radical self-honesty. Have you already built your core? Do you have a globally diversified index fund portfolio? Do you have a fully funded emergency fund? Are you free from high-interest debt? Is the money you would use to buy PTP truly money you can afford to lose without it impacting your long-term financial security? If the answer to any of these questions is no, then an investment in a high-risk asset like Platypus is not a strategic move. It's a reckless gamble. So, let's bring it all together. I cannot tell you whether to buy Platypus Finance. Nobody can. Anyone on the internet who tells you with 100% certainty that a speculative asset like this will go up or down is a fool, a liar, or both. The goal of this analysis was never to give you a fish. It was to give you a fishing rod. It was to provide you with a rational, unemotional framework that you can use not just for Platypus, but for any high-risk, high-reward investment you encounter in the future. The 5-point checklist. The technology. Is it truly innovative? The tokenomics. Is the economic model sustainable? The history. Does the team inspire your trust? The valuation. Do you see it as a bargain or a warning sign? Your portfolio. Does this fit into your personal strategy as a small, speculative bet? Take this checklist, do your own deep research, answer each of the 5 questions with brutal honesty, and you will arrive at a conclusion that is not based on hype, FOMO, or fear, but on your own independent and rational analysis. That is how you invest with confidence.